So, Pete, Nvidia, we all said there was a lot riding on it. We both said it's not a make or break because unless Nvidia really didn't have a report that was even close, it was going to be fine. And it was fine. Company's first report since DeepSeek, that Chinese basically AI competitor, came out there. Their numbers were great. I mean, Pete, quarterly earnings, almost $40 billion, a 78% increase over this time last year. Obviously, that's pretty damn good. But again, we said it's unlikely to make it move to the upside or to the downside very big.
Mm-hmm. Yeah, it's pretty interesting, John. I'm looking at this company now, and you see it differently than we once did. And I think people are starting to break this thing down. You look at the PE, for instance, the price to earnings that they sit in. It's down to a 30. This used to be in the 70s pretty consistently. It's down to a 30. Free cash flow is great, 39 billion. What they did was they talked about DeepSeek, sure, China and the AI and the low cost and everything else, and it's a possibility that that actually could work well with what NVIDIA's got. And the numbers, as you said, being up 78% year over year on a company like NVIDIA, that is a monstrous jump, a monstrous number. Blackwell sales were up 28%. Everything that you looked at sounded pretty great. The stock was moving pretty nice. What turned things around in the market, and all of a sudden it really turned around in the market, was this move because of the tariffs. And all of a sudden that started pulling back, I think, on NVIDIA. But, you know, right now, people are just still being cautious. They still don't know how to trust this whole thing. DeepSeek is still something that sounds like a bit of a concern. But I'll tell you what, I look at NVIDIA and I think as it sits right now, it was up 3%. Now it went down 3%. I think that's an opportunity. And I like what I see out of NVIDIA right now. And I like what the future looks like as well.